Greetings, traders. In this video, I will be breaking down the simplest ICT strategy that you can use to make money in the markets every single day. If you are an unprofitable trader, stop what you're doing and take extensive notes on this video, because this strategy is the only strategy that you need to be profitable. I did not find profitability until I started removing all of the indicators off of my chart, until I started simplifying everything, until I started sticking with one strategy during one specific time frame. And it was only until then that I started to find success. Once I cut back the layers of all of this complexity and broke it down into a simple 5-6 step rules that I'm going to give you right now in this video that you can use, that you can steal from me, that I learned from ICT, and that I've tweaked to fit my own needs so that you can be profitable in these markets. This is all you need. You don't need any other strategies. The reason why you guys are unprofitable is because you're trying to combine different strategies, or what you heard, take something that you heard from one video and combine it with something that you learned from another video. No, you don't need any of that. If you just take this video right here, just play it over 20 times and just do this, this is all that you need to be profitable. Okay? So I have a bunch of videos on my channel about the ICT Judas swing. This is the Judas swing strategy. This is the simplest version of the ICT Judas swing, and I'll explain it to you later why. But if you had trouble following the others, this is as simple as I can make it for you without holding your hand. And even this is kind of holding your hand. But I had some more requests on it, so I'm happy to make more videos on it. Just to let you guys know, I took a trade today using this strategy, and this is a review basically of the trade and show you my thought process, and also how I made $800 on the NASDAQ today trading this exact strategy. Okay, so it's not like I'm gatekeeping anything. This is exactly what I did to make money, and you could be making this money too. All right, so like I said, this is the ICT Judas swing. This is the simplest version of the ICT Judas swing. And the very first step is that you want to mark the high and low between New York midnight to 8:30 a.m. So to go over here, just to scroll back. So this is midnight today. Today is May 7th, 2024. This is midnight, and this is 8:30. So you want to mark the high and low. And I always get questions like, what's the time frame, or what's the thing? So this is New York time. This is UTC -4. Whatever country, whatever part of the world you're in, if you want to trade this specific strategy, the New York Judas swing, then you want to set your trading view or your charting software to UTC -4. Additionally, I'm on the 3-minute time frame. You can use the 2-minute, you can use the 1 minute. It's all up to personal preference, but I would go up as high as the 5-minute. The higher your time frame window, the less you're going to get into the trade, but the more the trade is going to be valid, because it just takes longer for certain setup to form. The higher the time frame, so if you're on the 5-minute, it's going to take a longer time for the setup to form, and it might not form. Whereas on the 1 minute, you're going to get it quicker. However, that being said, sometimes the 1 minute time frame might lose, whereas the 5-minute time frame, if the setup happens, it's much more valid, and you can take it with much more conviction. That being said, I'm just on 3-minute for this example. You can use the 1 through the 5-minute is my suggestion. You'll have to use this to your own personal preference. But whatever you do, I would suggest sticking with one time frame, your most preferred time frame. All right, so you want to mark the high and low between midnight to 8:30. So, like I said, midnight, 8:30. The low between midnight and 8:30 was at 7:42 a.m., and it was right here. And the high was at 5:09 a.m., and it was right there. And so you've got to think of this as like as a range, right? So if this is a daily candle that's forming right now, right? This is a daily candle, and I'm sleeping all through here, right? I don't care about any of this price action. London's happening through here. It doesn't really matter to me. But what I am interested in is when I wake up at 8:30, all right, I mark the high right here, and I mark the low. And so on the daily candle, right, there's a little top wick on the daily right there. There's a little bottom wick on the daily right there. And there's all this price action in between. I don't really care about anything that's happened. I really don't. This is also why this is a mechanical strategy where people have asked, like, the draw on liquidity, the daily buys, blah, 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 blah. I'm not saying that stuff is important. It is, but with this particular strategy, I'm not as concerned by it because it is a mechanical strategy that I just follow my rules, these simple rules. Once I start trying to combine different things together, I actually found myself not only more confused, but more unprofitable, trying to combine all these different things together, right? So just keep it simple. If you can keep it simple, this is what I'm trying to tell you. If you guys can keep it simple, you'll start to find profitability. But you also have to stick with this strategy, not just do this one day and it didn't work the next day, so you quit. You try another thing. If you can stick with this honestly, if you can stick with this for 1 month, just trade this setup for 1 month, and just the setup alone with the same time frame, the same time, and log all your results. And at the end of the month, if you're profitable, which I know you will be, then you just have to do that and then make tweaks from there. Okay? I'm not saying the strategy is perfect, but I am saying it is profitable. So high and low, we mark the high and low. So next thing we want to do is wait for one side to get swept. This is also referred to as a liquidity grab. So you want one of the sides, either the high of the day after 8:30 or the low of the day after 8:30 to get swept. So you want price to push past one of these edges of the daily price action, because we don't care about anything. This is essentially a range on the daily, and we're just waiting for price to burst through one of these sides, and then that's when we start to get interested. So at 9:03, you can see at 9:03, we took the high, right? So this was the highest price had been the entire day. When we popped out, we did whoop, and we took the high. So that's the next step. That's step number 2. Cool. Now we go on to step number 3. We don't care about any of this other stuff, or there's no indicators, there's no other things. This is purely price action and following a mechanical set of rules and trusting your rules also, and having the discipline to trust your rules. All right, so next thing we want to do is we want to wait for a market structure shift, but not just a market structure shift. We want to wait for a market structure shift with displacement. So because we took the highs, we're looking for a short. This is a bearish scenario, because basically what this is on a high level is this is a reversal strategy. This is a liquidity grab reversal strategy. So we're trying to short the high of the day or long the low of the day if we get a certain criteria met during a certain time frame. Okay, so we want to wait for a market structure shift with displacement. So a market structure shift just means that we're closing below, since it's a bearish scenario, we're shorting, we want to close below a previous swing low. So here, we took it right here. We took the high right here. And so where is the previous swing low? Right here. From right here, where's the previous swing low? Down here. This is the previous swing low. If you don't know what a swing low is or a pivot point is, I can make another video on it. Drop a comment down below if you'd like to see how I determine market structure shifts. But we took the high. And so where's the last place where there was a 3 candle pattern where there was the lowest low before price? Basically, it's like a dip, like a V in this case. So it's this. Where's the crux of the V where price was? All right, so cool. So this is the last swing low. So after this point, we need the price to come all the way down here and close below this swing low for a market structure shift. Or if that doesn't happen, then we just need the price to create another swing low, and then we need to close below that, right? So obviously we did not close below this swing low. So we come up here, price makes another high, still the swing low is down there. Price makes a low and then comes up. All right, perfect. That means this is our next most recent swing low. We need a candle to close underneath this swing low. So we make another high, we make another low, but we don't close underneath that swing low. That's fine. We make another low, then we make another high, and we've just now made another low. So we need price to close below this swing low. So this is our most recent swing low, right? You see how it's like we need to close below here, but we made another low. All right, we need to close below here, but We made another high, so we need to close below here. We made another high, but notice how this high is a lower high. This high, this right here, is a lower high than this high right here, right? So we made a low, we made a high, we made a higher low, we made a lower high, and then we made a lower low. Boom. All right. So this is our market structure shift. And if you don't understand that, that is like the key. That's probably the most important part of the video right there that I just explained. So you need to watch it a couple times because we made a higher low, a higher high, a higher low, a lower high. Once you see this lower high, we made a high and then a lower high, and then we closed below that previous low. That's the market structure shift. That is like once I see that, I'm like ding, 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 ding. Our setup is happening. Cool. So this is our market structure shift. It's right here. That's our market structure shift right there. So that is the last step. And also, did it create displacement? Did it create a fair value gap? And so did the candle that closed below the previous swing low, is there a fair value gap in that price, that leg of price action? And yes, there is, right? So the candle of FEG, or a fair value gap, a displacement, whatever you want to call it, is a 3-candle pattern where the bottom wick of one candle does not intersect with the top wick of the third candle. Remember, it's a 3-candle pattern. So we have a nice big fat juicy fair value gap right here. All right, perfect. So we did have a market structure shift with displacement. Now we can move on to the fourth step, is we want to enter on that FVG. So now keep in mind, this FVG is not confirmed until this next candle closes, right? So it's a 3-candle pattern. So at 9:51, this candle closes, and we have a market structure shift with a fair value gap after sweeping the high of the day, right? So price is just taking the high of the day. We have a bearish fair value gap, a bearish market structure shift, and we have a confirmed fair value gap. Now that means we want to enter. So we would be entering after this candle closes. So right, this candle will close at 9:51. So it opened and it closed right there, right? So it opened right there and it closed right there. So we want to be coming in and get on the bottom of that fair value gap, and we be getting tagged in somewhere around 9:54. All right, so we entered on the FVG. Now you're wondering, Andre, where do we set our stop loss, right? So our stop loss, we want to be covering the FVG candle. So again, the candle is a 3-candle pattern, 1, 2, 3. And so we want to cover that high. So that's all the way up there, which is fine because that gives us plenty of room. And now here is what makes this so simple. We're going to be targeting a fixed 20-point profit. Now, in the past, in some of my other videos, I recommend a 1 to 2 risk reward, which is fine. It's good. It's solid. Sometimes you're going to get way more than 1 to 2. Sometimes you get 1 to 5, 1 to 10. Other times, you're not going to hit that 1 to 2. So something that I've been doing recently with much success is going for smaller take profits, but they're hitting much, much, much more consistently. So 20 points on one contract on the NQ is $400. I enter 2 contracts, so that is 400 times 2. That is $800 right there, right? And so that's it, right? That's as simple as I can make it. You are in at 9:54. You are out at 9:57. And yes, price does go a little bit lower. But if you were targeting 1 to 2, you obviously never would have hit that. This is a 0.82 risk reward. Some of you guys won't like that, but also some of you guys aren't profitable because some of you guys have heard you have to hit 1 to 3 risk rewards, blah blah blah, 1 to 4. That's the only way you can be profitable. You do what you want to do, but if you're still unprofitable, I'm telling you right now, this strategy will make you profitable. Right? This is as simple as I can make it, and on top of that, you're going to be super consistent, right? Because this setup happens about 3 to 4 times a week. Last week it didn't. It only happened once, but it happens. I've seen it happen as most as 6 times in 1 week, and as little as 1 time. So you got to get more patient. You got to get more disciplined. But this is the setup. Also, Some caveats, some notes to this. You only want to enter on the setup between 8:30 to 11 o'clock, right? So if the market structure shift happens before 8:30, obviously you wouldn't take it. And if the market structure shift happens past 11 o'clock, you also do not want to take that. So this is the strategy, right? This is it. This is everything that you need to be profitable, to be consistent, to be disciplined. You just need to follow this. Now, you need to go and do your own back testing if you prefer the 2 minute, the 1 minute, the 5 minute. But this is all that you need. And so if you can stick with something like this for a month, and you can steal this right now, just stay on 3 minutes, stick with it for a month, target only 20 points. Don't be concerned if it goes 200 more points in your favor, because that happens sometimes, right? But other times it'll only go, like this time it only went 20 25 points in our favor before, look, it reversed, right? And so you might say this was a bullish day, and if other people might tell you, oh, the bias was long, blah blah blah, the daily, but the weekly was a fair value gap, and all this, like, bro, keep it simple, especially if you're not profitable. That's once I kept things simple, and once I kept things mechanical and just followed a certain set of rules. I can't tell you how many times I was like, okay, well, I'm going to enter this trade because this is following my rules, but I don't really like it. It feels like it's not going to work out, and then boom, it works, right? So steal my strategy. I'm sharing the love because I'm getting funded. I'm making payouts with this, and I learned this from someone else, and I learned it for free. So why not pass it along? All right. So just to review everything, you mark the high and low between midnight, New York midnight, to 8:30. Right. Then you wait for one of those sides to get swept. You wait for a market structure shift with displacement. Again, we talked about a market structure shift. A bearish scenario is a closing below, a candle body close, not wicking below, but a candle body close below a previous swing low. Then you want to enter on that fair value gap on that retracement and target a simple, easy 20 points profit. ICT says you just need to if you can make 20 points a day consistently, that is all you need. You don't need 100-point swings. You don't need 1-to-4 risk reward ratios, whatever. If you can make 20 points a day, which is $400 on one contract on the NASDAQ, that's all you need. I get some other questions. Yes, this works on Euro USD, on Forex. If you want to do Euro USD, I recommend that. And it also works on ES or SPX 500, whatever you want to call it. Like I said, I keep things super simple. I only trade the NASDAQ, right? I only trade NASDAQ futures, and I only look for this setup. I don't care about SMT. I don't care about divergence or the weekly, where the weekly is, or think. Yes, I'll look at that. But if you can just follow this and do this consistently, this is my challenge for you. If you can just do this for 20 trades, not even for a month. Do this exact setup for 20 trades. And if after 20 trades you're profitable, come back, post in the comments, hey, Andre, thanks. Now I'm funded. Now I'm making money. People will charge you $5,000 for this stuff. I'm not going to do that. Yeah, so this is it. That's literally all you need. Now, are there other more profitable strategies? Sure. Is there a way to make this strategy more profitable? Sure. But is this simple? Sure. Yes. Hell yes. It's very simple. Anyone can do it. That's all you need. If you found this helpful, drop a like, drop a comment, subscribe, and I'll see you in the next one. Peace.